Good morning, everybody. I can still say good morning for the next 23 minutes till it is noon here on the New York, Detroit Eastern time zone here in the United States. Guys, I don't know. Do we want to start? We've got a couple different F words we can start with today. Friday, one of them. A couple other F words I'm thinking of in the chat. You can drop them if you want to take a guess. That we can start off with today. Kind of two of the biggest headlines. But yeah, I mean, we'll do a quick check on the overall indices. S&P 500 right now down 1.35%. Your Q's down a little bit more. Talked yesterday about how, hey, look, when things are looking bearish, it's okay to change your position and not be super long. Mad Money wants to look at futures. Fool. We could do fool. I mean, we can talk about where I've been a fool. Freaky Friday. Yep. I'd like to FedEx. There we go. FedEx is one of them. The other one was Figma. Figma was from yesterday, the Adobe news. I just have some thoughts on it because I looked into the deal more last night, was doing some of my research, some of my due diligence, because I do like Adobe, and I like the Adobe stock. So to see Adobe get absolutely crushed yesterday on this deal announcement, I looked into it. I wanted to see, okay, is this really a bad deal for Adobe? Are they really overpaying this much, or is this an overreaction from the market? I have some thoughts on that. Of course, just my opinion. But yes, we will talk about FedEx. That is the biggest headline of the day. Everybody out there, that's bearish, points to FedEx and say, hey, look, we see we're right. The economy is turning down. We're right. They feel vindicated. When we'll talk about where that's true and maybe not, I'm not going to say not true, but maybe where we shouldn't just say, okay, whatever FedEx says is where the economy is going to go. Outside of that, we will take a look at some different stocks. Something that I saw yesterday that might be interesting. I know this four-letter word might be dirty to a lot of investors now, but I want to talk about it, and that's ARKK. We will be talking about ARKK. Yesterday, ARKK closed in the green, up about 1.5%, while the Qs closed down. So that's not something you see very often, where the NASDAQ 100, big tech overall, right? Your Apples, Microsofts, Amazons, Teslas closed down, but your high growth, your ARKs actually close up. So that happened yesterday. Maybe you could construe that as seeing some relative strength, but ARK is down a decent amount today. But it just got me interested in saying, okay, let me look at ARK here. Let's see what we're looking at here. So we will talk about that. Keith Smith wants to talk about LNG, some liquefied natural gas, Cheniere Energy. We can talk about that. We can talk about the energy markets. You thought you was going to say gain. What do you mean gain? I don't know, but LNG, we can talk about LNG too. Drop bearish, NASDAQ. I mean, okay, so let's go ahead and start the intro. I'll bring up my Benzinga Pro. We'll go. We'll take a quick run through the indices today, see how we're moving on this beautiful Friday, and then we'll go into some individual headlines from FedEx. We'll talk about some ARKK. We'll talk about some Adobe Figma. We'll talk about some LNG, some liquefied natural gas. Anything else y'all want to talk about, I'm game. Drop them in the chat. Let's go ahead, run that intro, and get the show started.
This is Benzinga Live. Spencer Israel and producer ADBE. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have a breaking news.
Oh, I see what you're saying. You thought I was going to say gain. No, I mean, that's what we're all going for right now. I saw an interesting tweet today that I was looking at. So basically reads, so August had an 8% rally mid-month followed by a 10% drawdown in less than a week. So essentially the S&P 500 went up 8% in August, followed by a 10% drop in less than a week. So both bulls and bears could have made money, right? Right. Yet most got served a donut. And this is the nature of bear markets. Bull markets, right? You can go long, you can make some money. Bears are pretty much getting crushed. Yeah, Adam, I know we need the update without Spencer, but I think it's in the works right now. I don't even know what's going on with that. I'll follow up about that. Bull markets, easy to make money, right? That's COVID markets 2020, 2021, when everyone was buying Bitcoin, everyone was buying stocks, buying GameStop, whatever it was, everything was going up. Easy to make money, right? Bear markets, you'd think it's the same thing. You just got to be bearish instead of bullish, but that's not really the case. Bears, even, I mean, look, if you've been short since, and what do I got pulled up right here? I've got the Invesco Solar ETF. Let's pull up the spot. If you've been bearish since, November or January, right? I've hope you've made money. But you can see looking at this chart where even if you were, say, right here, the market ripped up from 423 in January to 460, and you said, okay, I'm going to get bearish here. I don't think we should have had this rally. I think things are bad. The market goes down again and then shoots right back up. So if you would have opened your trade here and never closed it, you got served a donut. And same thing right here, right? You go short, then you get to bounce back. So oftentimes in bear markets, even bears, even shorts struggle to make money. And that's why it's so tough to really survive these markets, because any novice trader, anyone who's beyond just beginner level, knows that you can't, just stick to one strategy. You can't just be long everything all the time. So, I mean, right now it's just tough to, I think, have any idea of how to make money trading in the short term, in the medium term, which is why I'm taking this out as an opportunity to, and again, I talked about this, a little bit yesterday, where I know I'm in a very different position than I think a lot of people, where I'm young and I'm able to add I'm able to add to some longs that I like, knowing I can hold on to them for a very long time, right? A lot of people aren't in that position. They need money or they need investments that, are going to either be safer in the short term or provide an opportunity to access that money at some point, sooner than I would potentially need it. But all right, let's get into the top headlines of the day. FedEx, ticker FDX. Company's been public since 1970, I believe. I think this is the worst day ever in the company's history of FedEx. Let's look at this. So this is a $53 billion market cap. You're talking about 23%. So you're talking about something like $15 billion of market cap getting wiped out in a single day. FedEx has long been seen as kind of a barometer for the economy, right? If FedEx's earnings are good, that's a good sign for the economy. People are spending money. People are buying goods. These goods are being shipped around, both to businesses, to individuals. It's seen as a good sign of the economy. And we've talked about this a lot before, where when FedEx reports a good earnings, right, we're like, oh, wow, that might mean GDP might be higher this year or whatever. So that is in large part why, outside of FedEx, you're seeing the market overall down today. It's kind of seen as a big warning. We can go further into not just the earnings results, but kind of the company removed its guidance, gave some potentially scary, let's go into here. Let's see if we can get some quotes here. But here's I think, I guess, to play potentially devil's advocate here. All right, so let's go in here real quick. FedEx results were particularly impacted by macroeconomic weakness in Asia and service challenges in Europe. As a result, FedEx now expects revenue in this segment to come in at approximately $500 million below previous company forecasts. So, look, I'm not going to try to spin this and make it sound like, the earnings aren't that bad, because they're not great. Look at this. The company's still going to make, how does this even make sense? Wait, how does this even make sense? The company's going to make $24 billion in revenue in a single quarter, but the market cap is only $53 billion. It must be spending a lot of money, I guess. I don't really know. But either way, here's the, BioNoob. We're going to get Neil back on the show soon. This quarter to the end of this year has been very busy on some like internal Benzinga things. So that's why you might see a little bit less of Neil, Luke, Raz on the shows. But I'm anticipating, Q1 2023, we might get some more of them back on the show. But all right. again, I'm not going to try to play devil's advocate here and tell you the earnings weren't that bad. You can see the market's reaction here. I mean, on the chart, huge gap down. Basically, all these gains from July 20 on, so 2 years plus, erased in FedEx. But here's the flip side to where I would say, and especially if you have people that are already bearish and then they see this FedEx news and they say, see, I told you, the economy's in trouble. This is terrible, all this stuff. Here's the flip side. We've seen in data, right, whether you're looking at credit card transactions, debit card transactions, total money spent by consumers, that the consumer has remained pretty resilient throughout the last, year. Even as inflation's risen, even as consumer sentiment has dropped, consumer spending has remained pretty high and even growing. Now, what a lot of economists are out there kind of pointing to, and we've heard this before, right? If we go back to Target, when Target gave this whole thing about their inventory, and we'll go to a daily chart here. I believe this was here, right? In May 18th, Target stock, just like FedEx, down 25%. But Target CEO, if you look at what he said in this earnings report, was like, he's like, hey, our foot traffic is still fine. The consumer is just shifting. The spending is shifting. Instead of buying electronics, instead of buying TVs, computers, and all these things that people were buying during COVID, people were starting to buy different things. They were buying, nice clothes instead of workout and casual clothes. Because during COVID, right, everyone wanted to be comfy, right? Nike, Lululemon, all these gym clothes and stuff took off. But now people started buying, right, business clothes to travel, suitcases, some of these things that Target said, okay, we aren't well positioned for this because we were stocked up on all these things people were buying during COVID and not anymore. Now, how does this relate to FedEx? Well, we know from Target, right? It's not like Target's got a small sample size. They've got millions or however many hundreds of thousands of people shopping there every single day. That consumer spending was starting to change. And I'll ask this, and I'll look up some more data of this over the weekend because I want to see. But I would want to know anecdotally, we've got more than 100 people here in the chat, and myself included. I'll say for myself, over the past 3 months, 6 months, compared to a year ago or during COVID, I've spent a lot more of my money on services, on entertainment, on travel, rather than goods. And guess what? FedEx isn't going to ship someone a concert or a plane ticket. They're going to ship you a new pair of shoes or a new iPhone or a new computer. But people aren't buying as much as those things as they are now spending their money on these experiences, on getting back to concerts, on going to sporting events. Right. So, again, I'm not saying, oh my God, the economy's fine, everyone calm down. There's obviously a problem. I mean, there's a reason the market's not bad. I'm just saying, would it absolutely shock me if, people buying less goods, FedEx makes a little bit less money, but the economy is still overall okay? No, that wouldn't shock me at all. I'm not saying, oh my God, we're fine, everyone. I'm the biggest bull right now. I wouldn't even say I'm bullish right now. I just want to, I guess, give the flip side to people looking at FedEx saying, okay, this is the worst sign in the world for the economy. And you got to think about now expectations are being lowered, right? So then when Christmas comes around, if we get a surprise beat, and oh my God, people did buy more Christmas presents than we thought this year. And we've already seen headlines that people are getting a head start now on Christmas shopping because they're worried about inflation. They're worried that jacket they're looking at getting their son for that's $100 might be $120 by December if they wait. So they're getting it now. So that's the flip side to when you get these things. Like now the expectation for FedEx and for the overall like goods being bought is lowered. Let me know in the chat what you guys are thinking about FedEx. Adam's saying Nvidia seems both cheap and expensive. So we talked about Nvidia a little bit on the show yesterday because I said I would start buying some down here. Now we're down here. Now I don't really know if I want to buy some. I do. I mean, I think from most fundamental, like traditional fundamentals, the stock is still very much expensive, right? You can see the forward PE almost 40, price to sales 11. I want to see the S&P 500 is about 2.5 or 3. Yeah, that's the expectation, right? Is you get this bullwhip effect, right? Of these companies stocking up on all these goods people are buying during COVID. Okay, now demand might normalize, and then you have this huge surplus. You're already seeing that. You heard Target say that. Look, we might have to cut prices as much as like 75% to get some of this shit off the shelves out of the warehouse. I'm stoked about that personally. Because that might mean I might be able to find some good deals on some things I want. I don't know. Really, like I think the most consumer goods I'd be interested right now is like golf equipment. I doubt we're really gonna get a lot of those goods, those good, sales there. But we'll see. We'll see. I do, but on the flip side, because hopefully those prices being cut across the board, if they are, will help lower CPI and then hopefully help the markets get back up. So yeah, Adam, I would say the stock is still expensive from a lot of traditional fundamentals, but obviously with Nvidia, a company that has had such strong growth. If we go over to the financials, right? If we go to annually, you can see over the last, gross profit goes from 7 billion to 6 billion to 10 billion to 17 billion. So like you've got really good growth here. So when you have a company like that, people are willing to pay a higher premium. People are willing to bypass the high PE, the high price to sales, and say, yeah, I want to own this stock. I love Nvidia. It's one of my favorite. If I were building a portfolio right now to hold for 20 years, Nvidia would be one of the top holdings in it. Absolutely love it. I think from a technical standpoint, right, you have this clear consolidation here for about 6 months from August 2020 to March 2021. We were trading sideways in kind of this, we'll call it 145 to 115 range, and we're in that range right now. So if you bought some right here and then put a stop loss at like 120, 115 and said, okay, if we break out of where we had a lot of support, if we break below where we had a lot of support down here, that would be a sign to me that, okay, we could move lower. There's really not a lot there. But again, all depends on your time horizon. I know we have different people out here that are day trading, people that are swing trading, people that are long-term investors. So, hey, keep just depending on your time horizon. I think soon we are going to see one of those. You know how you always see. Let's do this. Biggest. I just saw this chart on Twitter. I wish I could find it. Like the biggest, the biggest rallies, the best days essentially in market history have like all come in bear markets. I expect we're gonna see one of those type of days here pretty soon. I'm not saying that's bullish for the market because it'll still be associated with the bear market, but I wouldn't be surprised after, the CPI print Tuesday, after FedEx yesterday, after all these things, right? More and more people piling in on this bearish trade. And guess what? Like I started the show with, in a bearish market, it's not that easy to make money. It's not as simple as I'm going to go short and make lots of money. If your timing's perfect, yeah, great. But a lot of people, right, get bearish, market rips. They don't close their position when when they should have, end up flat or even losing money. So we'll see. All right, guys, let's go back, or let's go to Adobe real quick. So Adobe, like I mentioned, I do like this stock. I like this company a lot. They're a good company. You can see here just incredible growth. But this is ugly, man, this chart. You can see. Zooming out here, we're on a daily chart. Maybe let's go to a weekly. Like this growth right here, let me draw a trend line. That's sustainable. What Adobe was doing right here was not sustainable. So I wouldn't... this probably isn't the best line ever. It should be more like this. I wouldn't be surprised to see this come back down to the trend line, which at this point would be around like 230. But here's my problem. Adobe announced yesterday to acquire Figma, which if you're in tech, if you're in software, you're familiar with Figma, for $20 billion. Now, pretty much any time a company announces an acquisition that allows... Adam said I might need to log that chart. I'll be honest, I'm not the biggest technical whiz. So let's see. I don't know. Typically, when a company announces it's going to acquire another company and it's going to use shares to do so, so Adobe's saying, hey, we're going to buy Figma to come up with this $20 billion. We're going to use some cash, but we're also going to issue some shares, you know, raise some money, use some shares to do this deal. Typically, the market does not like that. And for whatever reason, you know, you saw this with, I go back to the Frontier Spirit deal, right? The company that was getting acquired, those stocks are up because there's usually a premium associated with that. And then, let's go. I don't know, Adam, maybe sometime you'll hop me on the or come on the show with me and give me a nice tutorial on this, because I don't know what I'm doing on the charts on here. But typically when a company announces it's going to use cash to do that acquisition, the company that's doing the acquiring sells off a little bit. We saw that with the Spirit Frontier. I believe it was Spirit was the one getting bought outright, and then so Frontier was down where Save was up. Figma's not public, so of course their share prices weren't up yesterday, but they would have been had they been public. I don't, like I said, looking at the chart, right, Adobe looks like it's more than likely not going to come back down to its trend line. But here's I guess my problem with this is I think a lot of Wall Street, right, sees this deal in this environment where a $20 billion acquisition seems like they're overpaying, whatnot. Adobe is a huge company. Adobe, when it was down 23%, right, you saw its market cap get wiped out by like $25-30 billion. That's a lot of money. I don't think, here's just my guess, I don't think a lot of the, a lot of Wall Street, a lot of the people trading this, a lot of maybe the algorithm doing this, really have much understanding of what the Figma acquisition means for Adobe long term. And I don't think they're really concerned with that, right? I think the bottom news was this was, seen as a bearish headline for Adobe. I think as an Adobe shareholder, I might add some down if we keep getting moving a little lower. So I'll read a tweet from this man who knows more about software, about the Adobe business model that I do. And that's the thing, is like Adobe is a huge, huge company. I don't know how many employees at the top of my head, but $150 billion. I just don't understand how like these people from the outside looking in on Wall Street can think they know more about this deal, what it means for the company, what it's going to... I know it's their job. That's what they're going to do. But act like Adobe's not aware that, there's been a big capital markets drawdown, right? That think like, okay, is this overpaying in this environment or not? Like, they're aware, right? They found that $20 billion was a fair value. Maybe a year ago, maybe that would have been $45 billion. But here we go. This is coming from Amal DeRoy on Twitter. He's a partner at Anorak Ventures, investing in VR, AR, computer vision, robotics, and emerging tech. So he's a growth investor. He's a co-founder of LiveLoop, which was acquired by Microsoft. He was on Jeopardy for 2 days. If you know anything about Jeopardy, he's a smart guy then. Amal DeRoy. I'll drop the Twitter in the chat. I'm just reading off my phone right now though, so I can't share that. Actually, I'll do that. I'll share the tweet. That'll be easier. Sorry, I got Option Mike waiting in the background. We'll be right with you, Options Mike. Let me just read this tweet real quick because I had to wrap up on Figma Adobe. Again, basically, I'll condense my thoughts on this. I don't like Adobe was down 23% yesterday. It's down again today. The chart looks like the stock might keep moving down. At some point, I might start buying some more Adobe, and I like this acquisition for the company. Oh, he's been tweeting a lot about this. Okay, here we go. Here's the thread I'm looking for. I'm not surprised that Adobe is acquiring Figma for $20 billion, nor that Wall Street doesn't understand it, and Adobe stock is down more than $20 billion today. It's a smart move for Adobe because it's nearly impossible to make legacy software applications multi-user collaborative. I know this because I founded a startup, LiveLoop, to make Microsoft Office real-time collaborative. Microsoft acquired us in 2015 and has invested heavily into making Office real-time collaborative, and Office collaboration is now much better than in 2016, but it's still not Google Apps. There are two major barriers to making a legacy application into a multiplayer application: the file format. So this is getting kind of into the weeds on some techie stuff, but if you talk to anyone in tech, anyone in software, they use Figma. They love it. This is like I'm surprised Microsoft didn't acquire Figma. I'm surprised Google didn't acquire Figma. The fact that Adobe did allows me, makes me think, like, you had Microsoft acquire GitHub or GitLab, one of the two. This is kind of similar. Again, I like the move long term. Short term, looks like Adobe stock might still keep coming down. I don't know. I don't have a crystal ball. I don't hate the deal long term. I might start buying some Adobe. All right, guys, it is 12:04. We've got our first guest hanging out in the background. My man, Options Mike. Gonna bring on Options Mike. Talk about the crazy week we've had this week, how he's been trading it today. Tough day again. S&P down. Well, let's do quick at my last check. Down 1.2%. Come back a little bit since the show started. Without further ado, let's go ahead and give Mike our very special intro. Get him on the show. What is up, Mike? How you doing?
Hey, B, how are you, man?
Pretty good. Like I said, been a tough week so far. Of course, we had that not great CPI report on Tuesday and an even worse market reaction to that not great CPI report. This week has been tough. What have you been trading? What have you been doing? What's your strategy been?
Let's see. Trade a lot of different things this week. Mostly trade a lot of ENS futures. I made a very uncharacteristic mistake on Tuesday morning and chased that short and took a big loss, only to turn out to have been very right. And I had to go back and I worked my way out of that hole trading that. And I've traded ES a bunch short this week because that's obviously been the trade since CPI. I mean, that was that fooled me and everybody else. I thought we were going to get a better number. I did not think we were going to get a number that hot. And then PPI came hot, and then FedEx last night just dropped the bomb on everybody with that. Wasn't that they released earnings early that was bad, as they removed guidance for the year. My friend Jeff on Twitter, if you guys follow me, see us go back and forth. He was right. I agree with him. That was the biggest thing. We're removing our guidance for the year. That's just not good.
Are you talking about for FedEx?
It's just not good in general. For FedEx, if you're going to remove guidance for the year, it means you have your management staff saying we have no confidence in the next 12 months or vision, right?
Yeah.
Just no confidence in what we're seeing here.
And I was talking about it earlier. I think a lot of people or some economists are out there seeing that a lot of spending has shifted from like consumer goods to services. So where it might not mean, okay, the whole economy is collapsing because FedEx had a bad earnings, but it's obviously very problematic and very scary looking at that.
Yeah, but I mean, they're just part of what we're seeing already, right? Walmart has come out, warned. Target came out and warned. Microsoft came out pre-warned before earnings. And I think this is the trend we're starting to see here is, these guys were hoping earnings would be turning for this quarter. And we'll start finding out in about a month from today. I think we start seeing earnings coming in on the banks. But there was also a lot to do long this week. And I think in this market, for me, it's about being very nimble, not overstaying your welcome. Netflix gave a bunch of great trades on Wednesday and Thursday. First off, the news that they were looking to add 40 million subscribers after they, or whatever there was, once they go to their subscription model. And then on yesterday's had a big upgrade. And so there was great trades there. Tesla this week, which we traded a couple times. That's been relative strength until today. It was leading the markets. It was trading against the markets. So, there's always sorts of things to look at here. You just have to say where you want. Half my room has been shorting Meta. They've been having a great time with that. The one that surprised me is Apple. Apple's absolutely lit up in puts like I've never seen before in my life. And we're not talking cheap puts. We're talking long-term, very expensive, big quality puts on that. And that's kind of just a weird thing right now in the state of this market.
Yeah, and let me go ahead and pull up your charts here if you've got Apple up.
Yeah.
Yeah, and I mean, that's what, with the rally that we had from about mid-June to mid-August, Apple almost got back to pretty much all-time highs. I want to say it got up to about 170, 175, 174 mid-August. And since then, Apple's quickly gone down about 14, 15%. And yeah, it doesn't matter, I guess, if you're Apple or how strong your business is or how much money you make. If the overall macro environment, there's a downturn, people are going to be spending less money, you're going to get hit too.
Right. And so, I think this new iPhone 14 is just not being well received. Nobody thinks it's an upgrade. It does have a head and shoulders pattern we've been talking about here that triggered today. You see it's a very small left shoulder, then you have your head, and then you had your right shoulder and your neckline sitting right here. And, we took it out this morning right here at the 151 area. And, that opens the door for a bigger move down if it wants to go lower. Now, I wouldn't be chasing this thing short as, to your point, look how far it is down. In the last week, look at the highs from 164 to 149. That's a big move down. You don't chase down moves on that, but if the market stays weak, I would short this on bounces. I would look at that, and we'll see where it wants to go.
I think right there, like you said, if the market remains weak, like add the shorts on bounces. So the title of today's show is Too Late to Get Bearish, because I've had a lot of people this week alone, after the CPI report on Tuesday, after FedEx, say, okay, now I'm convinced. Like now maybe the bears were right. Now, maybe we're going to have some more pain, and like they want to get short now, where I'm sitting here like we're already I guess we're still not back to those June lows.
No, we're not even close to them yet.
I wouldn't be surprised to see if any bears that have entered like in the last 2 days get shaken out on maybe one of these bear market rallies, next week, and then we start moving lower from there.
Well, remember, we have the 5,000-pound gorilla next Wednesday, and that's the Fed decision on what they're going to do. So, the market may just decide to chop around a little bit until then to see what the Fed has to say and whether they do 0.75 or more or less. I'm expecting 0.75, but that and $5 will get you a latte from Starbucks, right? So, all I know is technically we had a big breakdown this week. We were strong. We had this uptrend, a series of higher lows in the market, and we broke below that yesterday, and we gapped down today, and we're now well below that uptrend line. So for me, you start looking down to we talked about 380 area support down here, and then if you can't hold that, and you start looking towards 370, and then we'll see, do we come down and find those lows at 362 or not? That's quite a ways to go. I think the Fed is going to play a role in this and what they say. Tough market, maybe. It really is. You have to be very nimble in this market.
Yeah, and that's what I was talking about earlier. I shared a tweet from someone saying basically August had an 8% rally followed by a 10% drawdown in less than a week. So both bulls and bears could have made money, right? Yet most got served a donut. So it's like, bear markets are tough. It's oftentimes not as simple as, I'm going to be net short and make a lot of money.
Well, if you look at even on, this is the way this market's trading. It's not giving big flushes. So if you look at the SPY on a 5-minute chart and you think of, oh my God, it was so easy to be short on the CPI day, it really wasn't, because after this massive down move in the pre-market hours off the numbers, you can see we didn't really get any momentum down. It was a very slow bleed down until we finally broke later in the day when you finally got a little bit. It wasn't easy being sitting here short because you just weren't sure. Were they going to buy it back? Were they not? And then you come in the next day. And again, this is where you love go to your smaller time frame charts. All we did there was we just chopped around, right? We created this very long bear flag before yesterday we finally broke down. And then, of course, FedEx FedEx kind of sealed the deal last night for the markets. I mean, that was the big thing, I think, that really sealed the deal for the market, at least for the rest of this week. And as I tell my members all the time, there's an old Wall Street saying, markets very rarely bottom on a Friday.
Interesting. I've never heard that one.
Yeah. So, usually they don't bottom on Fridays. And let's not forget, today's the quad, which we have so much going on. Besides from, FedEx stuff, we have $3.2 trillion worth of options expiring today, which is a lot of options expiring. So they got that. You got the SPY next dividend. You have futures contracts expiring. You have a mess.
Is there a way, and I might have asked you this before, is there a way to see, because I'm especially curious on retail, if like retail has started to, hedge more, buy more puts, put less money long into ETFs?
I'm sure there is some of that out there. I don't know. What I look at every day is, and I have some indicators. I look at the put to call readings on the New York Stock Exchange, and that tells me what's going on. Or you can even do it here real time on TOS with the dollar sign PCALL, and you see we hit a 142. Anything above one is starting to get very, very bearish, and usually start looking for a reversal. So we had sorry about that. We had a big spike on that today. And you can see here how this kind of works, showing you that, we had big put buying on the open, but it's come down steadily here since we came in. So these are quick things you could always take a look at during the day. But it doesn't show retail, and retail is always late to the game. And I mean that's the one thing you always have to remember. Retail is always the last one in and the last one to get out of the way.
Wow. Yeah, and I mean, I saw that there was that chart going around Twitter and whatnot from Sentiment Trader last week saying, and it was where the hedging was hot at more than at any point in 08, right? And all these things that I think looking back on it, may have been signs that we were going to see a downturn. But it seems like just a lot of people short right now, even though we've already been down now on the S&P 500, still 20% or whatever. I'm curious, what it's going to take to get people. And like you said, you hinted at, I think earnings will be a big thing a month from now. I think because if next cycle's earnings are really bad, right? We've already had these companies remove guidance, right? That will hopefully mean that the next quarters, then the bar's set a little bit lower, that eventually then maybe we can start getting some beats. Who knows?
Well, I mean, it is possible. I think you just need to see inflation. I mean, everybody thought inflation was starting to cool, and this week's data did not indicate that, right? It said inflation is still going higher. So it's given the Fed the Fed now has free rein to do a 0.75 basis point hike without a second thought, and they've all been talking like that. And the problem is, so the Fed can't affect food prices. The Fed cannot affect gas prices and oil prices, right? And some of these things. What they can do is they can raise rates, which makes money more expensive to borrow, and eventually it puts pressure on wage inflation. It also puts pressure on the housing market, right? I think we saw the mortgage rate today, the 30-year was over 6% this week. So, that's going to cool this stuff off. For me here, this is not the place you want to be looking short, but we haven't had yet in this market. You're looking for one of these big flush days, and we, the other day was a flush day, but we didn't have the volume. And the one thing I keep looking at on the SPY is where's this sell volume? So even on that big nasty down day on Tuesday, we only did 122 million shares. There was no panic. What you're looking for here, you want to find a bottom. It's usually indicated by a big flush down, a couple hundred million, maybe 250 million shares on the SPY. And it's just panic, right? Everybody's falling over themselves to get out of the market. We haven't seen that, and then that's, I think, part of why this market continues to hold up. Plus, most big money has a ton of money on the sidelines. And to your point, what you made is they're hedged. So they're willing just to sit here and just sell a little bit, but they're not looking to be selling big time into this. They've already done their selling.
Yeah. And I mean, I think I remember seeing a post not too long ago. It's probably a couple months old at this point, but it was basically that there's more cash on the sideline right now than at any time over the past like 20 years. And I think a lot of institutions, I think a lot of people are waiting for like a lot of these headwinds that we've been seeing, whether it's, Russia-Ukraine war, inflation in the US, supply chain issues, Fed uncertainty, all these different things, waiting for like some confidence, some more certainty. And I don't know when we're going to get that. It seems like we're just going to be in this mode of uncertainty until we're not. I don't know.
Well, I mean, we've had such a long run. So, we're not falling apart. We're coming in. Look at crude. Crude hit $130 on the announcement of the war with Ukraine, right? And now we're back down into the mid 80s, around 85. So you're seeing signs of some of these some inflationary things abating. The materials like steel have come down, and copper and aluminum, right? So we're seeing some in the marketplace, some of this coming down, but we're not seeing it yet really in food and in wages. And I think that's what they're watching here. Is they're watching to see wage inflation come down. And I heard you talking about Adobe, and that was that's $20 billion for that company is a huge outlay of cash in an economy like this. And that could have turned out to be great for Adobe, but it just shows you they're not afraid to put that kind of money out yet, which means they still think money's cheap.
Yeah, and I think right now a lot of people wondering too is, is the Fed willing to really like engineer a recession? Like you said, a lot of those commodities, steel, whatever, coming down, but some of that may be associated with a huge crush in demand as well. Like that, a lot of people are anticipating that these prices are going to come down, but it's going to be associated with a crush of demand with a recession. So it's like, is that bullish really that these prices are normalizing if it's associated with this, downturn in the economy?
It's I think we're in I think it's so hard here because we're in such an unusual place. We've never kind of been here. You had all these central banks pumping the economy for so many years, right? And now they're suddenly starting to pull back when the economy's starting to slow. Typically, isn't it the reverse? When the economy starts to slow, that's when the central banks step in and say, "We got this." And we're seeing the opposite now. And this is a whole new experiment here, AB. I mean, my guess is the Fed's going to overshoot and eventually have to start cutting rates back again, and maybe even do another QE if they go too far. Depending on what happens in the economy, there's a lot that can happen here or not. Does these Russia-Ukraine war grind to a? You're coming up on winter, so you got to think that's going to grind to a halt sometime in the next 3 to 4 months, right? And maybe something happens there. And then we see. I think you just have to see. I think the other more concern is Europe. Is Europe heading for a massive recession, and how are they going to heat them and supply energy if Russia cuts them off completely? I think that's one of the big worries out there.
Yeah. I mean, I don't know. So what have you been watching any individual names? I see Jay Rice in the chat talking about LEN, DHI, TOL, all green today. I don't know if I'm
the home
familiar.
builders, for whatever reason today, somebody in the room, I think it was Taz, called it out and said, "Why are they green?" I'm like, "Yeah, it's just their day up in the down cycle, right?" And these things have all been weak. What's been a consistent winner, they're just coming off the highs of the day here, have been clean energy names. Solar. Look at First Solar. That chart is just incredible. This move up. Run is another one. CSIQ.
I think that's interesting too, because a lot of these, I do think maybe some investors in an environment where there might be a broad economic downturn, and a lot of your FedExes, McDonald's, Walmart, some of those companies that might start making less money in a downturn, investors start get more interested in these like real growthy names. So they're like, if no one's getting good returns right now, might as well put some money into Sunrun or First Solar.
Well, they're also looking at these names now. You have that new stimulus coming to these guys, right? They're all that money that was part of the inflation package that's going to clean energy. So whether it's for solar or Plug or the electric charging names like Blink and ChargePoint, you've seen them all be really strong this week. Even Lucid today had a big pop on a ton of call buying in the next weeks. I think they were it's up there, the 19th, the September 30th, 19 calls, ribbon pop today. So they're looking at these clean energy names because they're thinking that's where they're going to have to go to make money, or that's where the stimulus currently is. But how quickly do we move to these? I don't know. We've been talking about this forever, and it's been a very slow adoption so far. But it's just finding names in a downtrend sometimes.
Yeah, and on that note, I don't know if you've looked at this chart in a while. I'm looking at it right now. ARKK. So ARK finished green yesterday while the Qs were down, which I don't even remember the last time I've ever seen that, where the Qs were down and ARK was up. ARC obviously down almost 5% today, but I don't know. I mean, at some point, right? Like this has got to get interesting.
You see, I don't agree with. I think Kathy had a great year, right? In the pandemic, she nailed it, and since then she has been about as cold as anybody can get. And this is, this ETF is filled. It has a couple good names like Tesla in it, right? But for the most part, it's filled with absolute crap names, and she just keeps buying more and more of them cheaper. So yesterday we saw a little bit of buying into those, and Roku was very strong for her yesterday. She has a huge holding on that. On another blogger saying they're going to get bought, but nothing behind it, right? And so you have to push up in that, and that helped her out yesterday. And honestly, I think she's in a tough spot. She's in the wrong type of names in this market. Names that are losing money, names that are in danger of going away, and she keeps adding to them.
Yeah, I don't. Yeah, I guess I'm not big in. Like I'm not a, I guess, believer in her thesis or what she's doing long term. I just meant from a more trading perspective. If I start seeing ARC get having green days when the Qs are down and then things like that, then I might get interested.
It could, and certainly it's a rotation trade, right? And that's what the market likes to do in a market like this. It doesn't want to dump, so it'll rotate some areas. Maybe banks one day, energy had the lead for a bunch, and sometimes you're going to get these names, the growth names, like the Rokus of the world that are stronger on this.
Yeah. All right. Let's see if anyone has any tickers they want Mike to check out, Mike, or if you have any other names you want to check out, let us know.
I think you just have to look for names. If you're looking to be long-minded, you have to look for the names that are outperforming the rest of the names. So that's what made Tesla so attractive this week. You can see here on the chart just how much it was stronger it's been. It was just relative strength until today. Even today, it's still holding the 8-day on the daily. So you have to look for names like that are just acting better. While Amazon has weakened quite a bit, it was showing relative strength in the market this week where the market was dropping. It was still trying to hold in. So you can look at that. Netflix, again, this is a tough name, but gave 2 days of nice trades before it came out. And look at today, it's still showing relative strength. So if you're going to trade to the long side, you got to look for names that have relative strength. You want to avoid the names that don't have it or not in play. So, you have to quickly look and say, compare it to the index it's in. So if you're looking at tech, how's it trading compared to the Qs? If it's weaker than the Qs, then that's really not a name you might want to look for short. So a great one this week has been Meta. We've been talking about Meta and this range forever on it, and it finally broke down today. And you can see here, it finally the other day took out the 155 area, which was the lows here. Now we're down to 145, and this long-term downtrend has remained in effect. And we called this out last week. We said, don't chase into that. And you can see here. So, these names are in trouble, these social media names too. And, these are things you should look to short. If they're weaker than the markets, that should be your short target. If they're stronger than the markets on a bounce, those should be your long targets.
Got it. Yeah. I know a lot of people have been asking about Meta and Snap and all these social names like you mentioned, but charts just look so ugly.
Everything's changing, and if the economy is going to slow down, there's going to be less advertising. That's how they make their money. So that's big problems for them.
Right. All right, Mike. Well, we've got about 5 more minutes, or I can let you go now if you got to run. But if you've got any final stocks, final thoughts, I'd love to hear them.
I think you need to all put together a shopping list. I have just lost my mouse wherever it went. There it is. A shopping list of names you want to own. I went over these a week ago with two of them I liked, which was PayPal and Ford as long-term as we come out of this. I like, again, PayPal, the relative strength of this chart versus the markets, the 50-day holding in here. As long as it holds the 50-day, you could be long versus that for an eventual move higher. This is a name that's been beaten to a pulp, trying to bounce, showing some relative strength. These are the type of things you want to look at. You want to have a shopping list together, and what I really can tell you is you want to know exactly what you want to buy. So you should start saying, I want to own this much of this. I want either stock or I want options on it, and what strike and what expiration do I want? So that when the market turns and comes out of this, you have an idea. You just look at the chart and say, is it still looking good? Is it still showing the strength? If the answer is yes, you take a little bit and you start buying into it there.
Yeah, I like both of those names long too. I mean, Ford, we mentioned the stimulus bill earlier that's going to come in, and Ford seems to be one of the leaders, or position themselves to be a leader in as far as some of the legacy automakers making moves into the EV space.
Yeah, so these still look great. I think, Snow, believe it or not, this name has my attention now. I'm not in it here, but um, you have this kind of head and shoulders pattern here that's kind of trying to break to the upside, inverted, and it couldn't quite take it out yesterday, this 203.54 area, but above that it can go. And Snow's a growth name, and while they're losing money, they're dangerous. They're growing it. They're forecast to double their growth next year. That's something gets people excited. So I think you can look for stronger growth names like this, and this one's holding up in this market, right? Where the rest of the market's weak, we're still here on the 8-day, still pushing up. Just be aware, it's got to clear the 200-day, which is coming down here at 211.79 and still dropping. So
Yeah.
again, go ahead.
Oh, no, you go ahead. Sorry.
No. So again, relative strength, right? And this is what you need to train your eyes to do. Look for relative strength in the market and say, okay, do I like the name? Is this something I would want to own or trade?
Yeah, and what I was gonna say on the note of relative strength, what about some of these names that are, and we mentioned First Solar earlier, but as far as like you look at some of these stocks charts that are Enphase Energy, which I believe is ENPH, that are like at all-time highs while the market is going through this downturn, does that get you interested in these stocks? Another one that comes to mind, Ulta Beauty is hanging out near all-time highs.
So Enphase Energy is a really illiquid name, so you got to be careful with this. I don't typically trade names like this. They don't trade a lot of volume on the stock, and they don't trade a lot of liquidity in the options. So you got to be careful. But it's like First Solar, right? It's a clean energy. It's a clean energy name. It looks great, and these will look great until they break down. So you have to have a place where if you're going to take them up here, you have to have a place where you can get out. Ulta's a little bit different. Ulta here has come in. Ulta's a retail name, and this name is it's women's it's perfumes and makeup, right? And
yeah, cosmetics, beauty, beauty and makeup.
And that's coming back because people are out and about again. So I think this is a different type of name where you could feel a little bit better about being in it because I think they're doing good and they can pass. Inflation doesn't matter to them because they just pass the prices back on to the consumer, right?
Yeah, I mean, if a girl loves the blush she gets from Ulta and they raise it from $10 to $12, she's still gonna buy it.
They're gonna buy it because that's the one they use. That's
right.
Exactly it. That's how it works.
Yeah.
So that's fine. So I think it depends on the sector. I wouldn't. We've been talking about how strong energy's been, but it's starting to show some signs of breaking down here after this nice push up. Lost the 50-day today. So we talk about not chasing names where they're on a roll. Now, Chevron hasn't been able to get back to the highs. And Oxy, which was everybody's darling, is way off the highs, and that's because Buffett came out and said, yes, I want to own 50%, but I don't want to own the company, and I have no interest in getting controlling interest of it. So that basically killed that because everybody was piling in because they thought he was going to buy the company. So you have to also recognize when the meta in the name changes, so to speak, right, and the language, what's going on, and that's what happened here with Oxy, and that's why names like Devon have been the better winners here, and ExxonMobil, because they're trading more upon their fundamentals than Oxy is at this point.
Yeah, Jay Rice saying Elf has been strong too, another beauty and cosmetic stock making all-time highs. And I feel like that's even where when you have two companies in the same space making all-time highs, like I'm listening even harder now, saying, okay, the market understands that this industry, but for whatever reason, makeup and cosmetics, maybe it's because people are getting backing out and more about it now. Maybe it's because I don't know, but whatever it is, they're obviously expecting this industry has been growing, been having good returns, and expects that to continue.
Yeah, and again, cosmetics has always kind of been a little bit recession-proof, not completely, but a little bit recession-proof. Airbnb was another one. Gia brought it up, and this is a very nice inverted head and shoulders pattern here on it. And yesterday, it tried to break out and came back in. So there's lots out there, Aaron, to look at and to play with. It's just you got to be patient. You got to look at the right names, and you have to decide what you want and how you want to trade it. And
I would add
streaming Netflix highs of the day, right? So you have some names showing relative strength here.
I would add Airbnb to my list of names my shopping list of things I wouldn't mind adding or owning long term.
Yeah. Again, I like the company. It's a good company, so nice little potential breakout. So anyway, that's my thoughts.
Awesome. Well, Mike, I appreciate you coming on. I know it hit you up short notice, and I know it's been a tough trading week, so you've been real busy, but always good to hear what you've been doing. How's the pup? How's the dog?
He's doing great. Yesterday, he had a little bit of a rough day. I had to rush him out. Almost had to take him to the vet, but all back
Oh,
today
man.
and happy can be.
It's funny how dogs can be like that, right? Sick as a dog one day and fine the next.
Thanks for having me on, and hopefully catch up with you next week.
Yeah, of course. All right, Mike, enjoy your rest of your Friday and have a great weekend.
Bye, everybody.
All right, guys, that was Options Mike. Going to drop his Twitter in the chat so you can give him a follow there. Always a pleasure to see what Mike's been up to. All right, guys, just catching up on the chat on some Twitter news. Guys, what's going on with the Twitter deal, by the way? Let's check out Twitter. Let's check out Twitter's chart here. See what the dealio is. See what Mr. Market is saying about the odds of this deal going through. I mean, what's the buyout price again? $54? Twitter buy share buyout price. $54.20. Of course, Elon had to make it $4.20. Price percent change calculator. All right. I'm just doing some quick math here. So if we go from 4160 to 54.20, calculate. That's a 30% increase. So if you bought Twitter right now and the deal goes through at that price, you can make a 30% in this environment. That's great. I think the fear is some people think even if the deal does go through, they'll reach some sort of settlement where, Elon might end up paying a little bit less than what they agreed upon initially. I don't know. I don't know how any of these. We got to get Matt Levine on the show. We got to get an M&A expert on. Patrick Starr saying looks like Nvidia's already bottomed. Are you talking about for the day? Are you talking about in general? I don't know. I mean, I think it's looking at weekly charts right here. What I like about Nvidia's chart, which it's not a pretty chart, you can see from here going from highs of 346 all the way down to 128. I'll say something nice about the chart. I like the fact that if you look back here, you have a lot of consolidation, right? These are weekly candles. So this is a long time that we were just trading, right? From August all the way till March, about 5 months or so, just trading sideways. And that's right in the range we're at right now. So that's why I think if you want to go long Nvidia right now, you want to feel really risky and buy in the environment where everyone else is bearish and everyone else is too scared. You can do it, and you can put a stop loss down here and say, okay, if we break through this previous support level, this previous level where we had this, then, all bets are off, sell your stock, and then it might go down. Patrick's saying look at today's reversal. All right, looking at a 5-minute chart. Oh, you're saying from... Okay, so this was pre-market 9:30. Ran up, sold off, bounced up here. Oh, I see. Maybe a potential like double bottom action. Maybe could come back up here. Yeah, nice little move on the 5-minute candle there. Up 0.3%. Ryan Mulligan said he bought some Microsoft because it's so close to a 52-week low. Yeah, and I think if you have been like sitting on the sideline, if you've just been waiting to add into... Wait. Hold on. Microsoft's 52-week low is... Oh, yeah, pretty close. 230. We're at 242 right now. If you've been waiting on the sideline as the market's downturn, you haven't been adding to longs, I do think it's not a bad idea if you start picking at some of those names like your Microsofts, your Amazons, your Apples. That might be a little bit more established because you never know, right? Microsoft, Apple, we could all draw down another 10, 15%. But if the overall market draws down another 10, 15%, and you went out and bought Rivian or like some big growth stock, there's a chance that that stock is now down 50%. And it doesn't matter if you're going to hold on to it for a very, very long time and it comes back, but not every company is going to come back. We know that. If you do due diligence and you pick good companies, you have good odds of picking stocks that will eventually make new highs, but not every company does. Not every stock survives. So that's why I don't think it's a bad idea to start picking at some of those more established names, your Microsofts, your Apples, your Amazons, your FANG stocks. I mean, Netflix has been just an absolute disaster over the past year or so. I mean, Netflix has drawn down, I think at one point, more than 70%. But look, we're on weekly charts here. It's pretty clear, right? From here's where we got, I think, like a first bad earnings report, down 10% in a week. Terrible earnings report here, down 24%. Another one, down 36%. You can see here, right? Okay, you can say maybe we try to consolidate for a couple weeks here, but then boom, drop down, boom, drop down. This is different. This down here is shares. It's showing me, and you can see the higher volume too, that there were buyers down here for Netflix at 185 and 190. And, you know, I don't mind. I like that we've gotten a little bounce here, but even if we come back down here and we start trading still at this level, right? If you guys watched Get Technical with Neil and I, an old show we used to do here at Benzinga, we talked about this all the time, that the wider the base, the wider a stock spends just accumulating and kind of hanging out at these levels, the higher the breakout you can expect it to be. So if Netflix comes back down here again and starts trading just in this $180 to $200 level, right? There's a chance you can see that just shoot up. All right, guys, let's see if we've got any tickers, anything anyone wants to check out from the chat. I'm going to go full screen here on Nvidia's chart for a second, see if you guys see anything you like. I'll go over from 5 minutes candles to some dailies. If not, kind of a slower news day. We may wrap the show up a few minutes early, but Money Mitch got a big show coming up. He's going to have Edwin Dorsey on from the Bear Cave, as well as another exciting interview, which that one is escaping me off the top of my head. It is with, Jake Hanley, the managing director and senior portfolio specialist at Terrarium Trading. Nightscope has the biggest base. Let's check that one out. Oh, wow. Yeah. That does have a big base. We've worked with Nightscope before. I don't know how much I'm allowed or not supposed to talk about this on the show. Tesla. Tesla's a good one. Tesla real quick. Tesla's chart is weird. You don't really see a lot of other charts that look like this. I think you still have, right, a bearish trend here. Let me try to find like a trend line. You can see here we're still making, whoa, that's not what I was trying to do. How did I delete that? Still making lower highs, right? We hit this high, and again, this is all split adjusted, so it's going to say, what, 414 here. And then you made this lower high here, lower high here, lower high here. We'll see if we can break out. I wouldn't be surprised to see this keep moving lower. Again, I think Tesla is going to be very dependent on the macro situation, everything going on there. But I'm certainly out of the names like we were talking about with Options Mike, different names we've talked about. I'm not very convinced that Tesla is going to be one that's showing relative strength right now. But yeah, guys, again, the title of the show, is it too late to get bearish? I don't even think necessarily. I just think if you are going to get bearish, just know in this environment, you can't hold your positions that long, right? Bear markets are associated with these bear market rallies. So if we keep moving lower, it's just a matter of time before we see one of these days where the S&P 500 is up, 3 or 4%, and NASDAQ's up 4%, and like your shorts are then down 20% that day if you're holding puts or whatever it is. So if you're going short, if you're going long, I would implore you to take some cash off, take some trim off the top. And like Mike said, have a shopping list. As these names get crushed down, find the names you want to own. Find the names you want to own long term, right? It's fun being short. It's fun making money. There's a very, I was looking at Enphase Stocks Energy because we were talking about it earlier. 5-year chart. This was a $1.41, $1.41 in September 22nd, 2017, up more than 22,000% in the last 5 years. You want to find a name like this? Guess what? They're out there and they're being crushed right now. And you're only going to have exposure to these returns is if you find some of these names and you go long them. Again, I'm not saying right now do it. I'm saying if you want to stay short, you want to be short, you want to try to make some money, good. Make some money, take some cash if you're in the green on shorts as, the market chops. And then maybe try to make some bets on some long names like this that you want to hold for a while. I know that's my plan. UK close to announcing a bill support package in the billions that will all go to Shell and BP, looking at BP as a trade. I saw a type that the new the new Liz Truss when she came in. I thought she was, and I don't know anything about UK politics or anything like that, but from headlines I saw from Bloomberg, it looked like they were discussing a stimulus package that would actually send money to families and small businesses, something a la like what we did during COVID. So I'm not exactly sure. So maybe there's a separate spending package that will help, Shell and BP. All right, guys. We don't have trivia today, I believe. We're going to go ahead and wrap up a few minutes early. Like I said, Money Mitch will be live in a few minutes here, so do not go anywhere. He's got 2 big interviews coming up. Thanks for hanging out with us this week. I know it's been a crazy week between the cannabis conference. I was out of town. Back. It's great to be back with y'all. Hope everyone has a great rest of your Friday and a great weekend. And we'll be back on Monday. Peace and love. Love you guys.
This is